Hello, everyone, and welcome to KeenVision's Enhanced Close Management Intercompany Declarations and Matching. My name is Joel Jarrett. I'm a managing director here at KeenVision, and I'm joined by Al Martinez, who's a solution consultant here at Keen. Talking about enhanced close management, and one of the factors and one of the solutions that we've devised for that is the intercompany declaration and matching process. One of the things that we found over the years is that most ERPs don't have a native trading partner or intercompany partner type of concept. So when you bring the data from the trial balances out of your ERPs into an application like Planful, it's lacking a critical piece of information to be able to do intercompany eliminations. So we've developed a intercompany declarations process that allows users to go in and identify who's trading with who for intercompany transactions. The second thing that this does is it also matches things at a transactional level. So when you perform intercompany eliminations, you will get a balance that says, okay, who's out of balance with who? But the next obvious question is, okay, why are we out of balance? Is that related to one side of the trade missing one of the transactions, or is it related to foreign currency effects, things of that nature? So we've devised a solution to address those issues. So Al, why don't you take it away for the demo?
So kind of just to recap on what Joel was mentioning. So you think about as, companies grow, your current state, you have all these things starting to move faster and there's a higher volume of stuff happening, right? So think about new or one-time intercompany transactions starting to increase. You have those trading partners not being identified as much. Think about the timing of when transactions are being recorded, right? Think about an AR, AP, intercompany transaction in between accounting periods, right? And then you throw in, currencies and FXs changes, float issues. That problem starts to become bigger. And so what our solution really offers is that ability for all those companies to come in, submit, and have more detail of their intercompany transactions. So think about that subledger data, the unsettled amounts in one central place, like Joel was mentioning. We can start to troubleshoot all those missing or out of balance accounts in an automated way to correctly balance and map the trading partners without that manual back and forth workflow between various teams. And at the end of the day, it's helping free up that time on accuracy, compliance, and reporting versus that prep on this workflow. Now, one of our clients with multiple controllers at a specialized manufacturing business had 5 ERP system, 5 accounts, and turned their spreadsheet department independent manual elimination workflow into an auto-eliminating common chart of account process, and effectively lowered their consolidation turnaround time by roughly 20%. So for today's demonstration, we're going to review the standard auto-elimination solution. Then we're going to review a variance and intercompany report. We're going to then run and analyze in more detail intercompany workflow using declarations, so that subledger data we just mentioned. And then we're going to prepare and review adjustments if needed before publishing. So let's go ahead and jump into the platform. Planful's consolidation feature, your local trial balances, and either your established intercompany GL accounts and or an intercompany dimension are the typical building blocks to ensure your eliminations can be validated and reconciled. So within your consolidation process, you could set up auto elimination rules that will scan all your company's trial balances, their intercompany transactions by account, due to, due from, and each of these rules will be created once and will be applied to all of your entities. And again, this is a one-time setup. So for this example, I'm going to just walk you through a quick intercompany AR AP rule that I've established for all of my entities. And what you're seeing here, again, is a one-time setup. First, you're going to identify where to store your out-of-balance accounts and default segments where fields are blank. And you're just going to be leveraging your either chart of accounts to map those or the dimension numbers that already exist. Second, you will then identify the accounts due from, due to, leveraging your chart of accounts. And then third, you will then create a threshold for variance reporting based on this background color. that you can come in here and edit per rule. So now that you've set up your rules, how do you find what rules accounts are out of balance? So typically this is done very manual, offline in spreadsheets, and you're awaiting that reporting manual process to run before you can actually go ahead and deep dive into root cause analysis. So leveraging Planful's out-of-the-box intercompany variance reports, you simply come in here, choose the rule that you want to report on, in this case, intercompany ARAP, select those accounts that are associated with this rule in the period in question. And now I can start to run variance reports on demand and in a self-serve manner. What you're seeing here is intercompany trading partners down the rows. And then you're seeing your companies across columns and the color codes that you've established for this rule. In this case, now I can see I've identified my European 2 entity and my Canadian 1 entity. There is an issue here of 27K. I can drill in and see down to the GL account level and my dimensionality associated with this variance. So what I've shown thus far is base functionality that we can set up to auto-eliminate, easily identify what two trading partners need to communicate and resolve an issue. So it helps speed up that root cause analysis and eliminates that manual data prep. Now, with a more advanced intercompany use case, there's added functionality we can set up to not only show you the who, but the what is causing the variance or the issues. So what is that correction? This solution is not out of the box, as it uses and contains the declarations for intercompany transactions. So think about those subledger data that creates the journals. Let's go ahead and jump into this next solution and show you. This solution offers the ability to run deeper analysis and identify your intercompany variances, so that path to reconciliation, and match your missing trading partners from your declarations data to ultimately produce your correct intercompany elimination journals. So what you're seeing here is your trial balance information on top with your entity and companies, and your declaration data down here below. And again, that 27K variance and my out of balance entities. You can now leverage this data to find out what is causing the variances and dig deeper into what that root cause is. So again, I'm going to focus on my European 2 and Canadian 1 entity to reconcile my 27K variance. So let's go ahead and jump into that. So for this example, the declaration form includes all of my entities in one place. So here they are, and my intercompany transactions. So assuming each controller has already uploaded this declaration into the system, I have access to all. Obviously, if you are a specific controller, you may have only access to your specific individual entities. And then you have your relevant information here, such as transaction information, your accounting information as well, to map to the correct GL accounts and correct trading partner. So we can also set up a solution where when you're loading your local currency amounts in your declaration form, so basically everything here to the left-hand side of a local currency amount, you can then set up auto matching based off of some unique ID or logic. So for in this case, we looked up a customer vendor name with a transaction ID to map our trading partners. And then you can also leverage your accounting ERP FX rates for average end of month and spot rates to convert your local currency amounts into your consolidated average spot and end of month rates. So going back to my European 2 entity, I'm going to go ahead and do some investigative work on this declaration and see that what records are showing up for this specific month for my European 2 entity. And I see here I have 2 records. And quickly just taking a look at this, I see that there's a Canadian amount here of 36K. And currently it's being mapped to nothing. So I need to go ahead and change that and override this with the correct trading partner. So reclass essentially. So I know for sure that this is going to be a Canadian entity. So I could just come in here quickly and create this override. and map this into my trading partner, Canadian one. Now my intercompany trading partner will now be reflective correctly. So next, I want to ensure that this is also being accounted for on the Canadian side. So instead of filtering just for my European 2, I'm going to go ahead and look up this transaction number. And since I looked this up, there is only one record associated with this transaction. And so I now know I need to account for this on the Canadian side on the accounts payable. So at this point, I can communicate with the Canadian controller to fix or resubmit their declaration with this specific update. And then I can go ahead and rerun my auto elimination rules to ensure that this has been reconciled and fixed. Again, you can just have them submit up to the local currency amount, and then we can leverage trading partner matching and or also highlight that consolidating currencies. And this just helps give more insight into potentially any mismatches and or the impacts due to FXs, such as variances due to timing or float issues. So for example, if I were to quickly just duplicate this, when a controller reloads their information in the system, this will then to the right will be populated with all the pertinent information within Planful. So let's go back to my report to show those changes and the reconciliation of my declarations. So now I can see the changes incorporated into my declaration and have the information to update my trial balance as needed. You can share this report with details with the controller to make those final updates within your ERP, or again, just providing the information to resubmit their declaration within Planful. So in summary, leveraging KeenVision's intercompany declarations and matching solutions to create a centralized, detailed look into your intercompany transactions allows you to auto-eliminate intercompany transactions, quickly find the who and the what, causing that out-of-balance variance or variances, and helps reduce your days to close. If you'd like to learn more about these solutions, you can email us at info@kvcfo.com, visit our LinkedIn page, website, or reach out to your contact from KeenVision for more information. Thanks for watching and have a good rest of the day.